Hello, and welcome to this week's episode of Mondays with Matthew. Today, I thought that it would be interesting to look at the new home market in the United States and how it's performed over the past couple of decades, and then discuss what we can expect in the future. So to start out with some context. This first chart takes a look at single-family new home sales dating back to 2000. And as you can see, sales rose significantly in the early 2000s, peaking at almost 1.3 million units in 2006, before pulling back quite significantly as cracks started to appear in the overall housing market. Sales dropped to a low of just over 300,000 units in 2011. That was less than a third of the pre-bubble average, before starting to pick back up again the following year. Although sales have continued to rise since 2012, the pace of growth can be best described as lackluster, with total sales last year coming in at just 682,000. Now, that is more than double the 2011 low, but still well below the levels seen early in the 2000s. Of course, it's easy to say, well, that's still a good number, because back in the day, the market wasn't real. People were buying homes they couldn't afford. The market was being artificially juiced by investment home buyers, etc., etc. And these are all valid points. But is that really the reason construction activity hasn't got back to pre-recession averages? Well, I'm going to offer you a slightly different thesis. To do so, I'm turning to the Census Bureau and look at their data on household formations. This chart shows the growth in the number of households in America between 2012 and the end of 2019. And as you can see, in an 8-year period, the country added almost 10 million new households. This is a pretty big number, which, for people like myself, brings up one very big question. That is, where the heck are all these people living? You see, the census helps us out there too. This chart shows new owner households minus new renter households. And as you can see, up until the end of 2016, a vast majority of new households were living in rented accommodation. And this is intuitive when we think about development patterns across much of the country, with developers focused on building apartments and, for the better part, ignoring ownership housing. But what jumped out at me in the data was that all this changed in early 2017, and you will see that the number of new owner households started to exceed new renter households by quite a significant margin. In fact, over the past 3 years, we've actually seen a net loss of renter households across the United States. So, for the past few years, we know that the country added a significant number of new owner households, 4.6 million to be exact, but we only saw 1.9 million new single-family home sales. There's a disconnect. Of course, some of those home buyers bought multi-family homes, which unfortunately are not tracked by the census, and many, obviously, would have purchased existing homes. And this is also very interesting, because it might explain, to a certain degree, why existing home prices have continued to rise relatively quickly over the course of the last several years. It's simply a matter of supply and demand. When you have limited supply, think new homes, but significant demand, think new owner households, what happens to prices? Well, they have to go up. So this all leads to the core question that needs answering, and that is, why have builders not been delivering far more product if there is all this pent-up demand? Well, that is where the second part of my story takes over. In simple terms, when a builder looks at any new development, and assuming they feel comfortable with the demand side of the equation, they start out by analysing the hard and soft costs associated with building the homes. And this is the area I thought would be a good focus for us. Here is a simple matrix of some, but certainly not all, of the cost centres associated with building homes. I'll add that there are other soft costs, such as marketing, financing fees and the like, but I want to focus on these four. Let's start with land. In many parts of the country, especially in coastal states, land prices continue to escalate, and this is particularly evident in markets which have artificial constraints to land supply. And these come in the form of growth management policies that are in place to slow sprawl in the market. Now, this map shows which states have significant laws regarding where you can and cannot build. All these states have very onerous restrictions, but I should add that there are numerous other markets not shown here where limitations are also in place, but they're just not at the state level. My point here is that by limiting the amount of land on which to build, especially in highly populated areas, land prices rise, which pushes up housing prices. Second, labour. Employment in single-family residential construction peaked in 2006 at a little over 635,000 workers, although this is clearly an underestimate, as it only includes workers counted by the Labour Department. Between early 2006 and January 2011, the number of workers dropped significantly as building activity ground to a halt, with the industry losing over 357,000 workers. The trouble is that, even when the economic recovery started, builders never got those workers back, as they had either left the industry completely or joined companies that were building apartment homes. The number of single-family construction workers today is still down by over 250,000 when compared to the pre-bubble peak. What does this cause? Well, if no one's getting into the trades, the job market remains very tight, and this does one thing: puts upward pressure on wages. Again, more expense. Next up, material costs. This chart shows the producer price index for residential construction and is a way of looking at changes in the cost of materials used in home building. And as you will see, the market has gone through a period of significant price increases for materials. There has been some softening recently, but prices are still running very hot. Again, higher costs put upward pressure on home prices. And finally, my all-time favourite, regulatory fees. According to the National Association of Home Builders, regulatory fees account for 25% of the final price of a single-family home. That's right, 25 cents of every dollar spent to build a home in America are regulatory fees. Again, a very significant expense. So, when you combine all these costs, add the other soft costs I mentioned earlier, and of course put some profit in there as well, a builder sees the price that the home has to sell for it to make sense. And that is the heart of the issue. If the house is simply too expensive relative to the market area, well, the builder won't build it. And if he doesn't build, then we end up with a shortfall in new housing production. So is this fixable? Well, I'm pleased to say that material costs did see the first January to March drop since the Great Recession, so there is some hope there. But we need to start looking at how to make some pretty big changes in the other cost centres that I've been discussing. Regarding land, well, we clearly can't make any more of it, but we can consider revising zoning codes inside urban growth areas in order to increase density where appropriate. This gives relief by lowering land costs on a per unit basis. I am pleased to say that this is already being seen in some parts of the country. In what was a very bold decision, the city of Minneapolis decided to totally eliminate single-family zoning and upzoned the entire city to allow for development of duplexes and triplexes on what had been single-family lots. This move effectively tripled housing capacity in many of its neighborhoods. Following Minneapolis's lead, last year Oregon became the first state to pass a similar plan, and Washington State is also considering similar legislation. On the labour front, we need to find ways to encourage some of our younger population to get into the trades. Higher enrolment in vocational schools is going to be very important if we're going to grow the number of much needed construction workers in the country. Finally, regulatory fees. This is going to be a hard sell, but cities need to look at how they can reduce fees to builders in order to help address affordability. And they need to take a longer-term view regarding how ongoing tax revenues can still grow with new homes and the new residents living in them. So to conclude, the country has a severe shortage of housing, and this has put significant upward pressure on home prices, which in turn has created an affordable housing crisis. I believe that housing is a fundamental right, and we need to find appropriate ways to grow our housing stock and move back towards balance in the ownership housing market. I believe it can be done, but it will take a lot of work from both the private and public sectors to get to this goal. I hope you found today's comments of interest. As always, if you have any questions or thoughts about this topic, I would love to hear from you. So with that, take care, and I very much look forward to visiting with you again next week.